Alrighty, guys, welcome back to the channel. Hope you guys are all having a fantastic day today. And boy, do we have some news today. The Federal Reserve, did cut interest rates for the first time in a long time. We were expecting to have a couple of rate cuts this year. So we're going to be talking about what's going on. How is this going to affect your mortgage? How is this going to affect the stock market? So follow, and yes, I know I do have some crazy hair, so make sure you guys like and follow. And if you want to learn more about investing, trading, check out our school. It's awesome. And code FALL for 50% off. But enough with that here. Let's dive into this. So the Fed cuts interest rates. Now, what happened, why, all that good stuff. The Federal Reserve has lowered its benchmark interest rate by a quarter percentage point in a highly anticipated decision surrounded by a lot of political drama. The 11-1 decision, supported by the federal chair, Jerome Powell, and a majority of the Federal Open Market Committee, also known as the FOMC, brings the central bank's overnight rate down to a range of 4% to 4.25%. So this is pretty crazy, marking the first change in rate policy in 9 months. President Donald Trump's economic advisor, Stephen Marin, newly appointed to the Fed's Board of Governors and sworn in on Tuesday, was the pretty much the lone deciding vote on the panel, calling, instead for a larger half-point rate cut. So obviously, I think we all know that we had high hopes, right? This year, the Fed came out, last year, they were expecting to have 2 cuts this year. This one being the first. I would be shocked if we have another one. And a lot of people ask, how is this going to affect the mortgage, your mortgage and all that stuff. So if you're already locked in on a mortgage payment, you're locked in on that. I'm sure you know that, but a lot of people actually don't, right? So if that just say you have a 4%, 4% interest rate on your mortgage, it's going to stay 4%. Now, what is exciting though, is if you have a higher interest rate, maybe your rate's at 7, 8%, whatever it is. Now you could possibly refinance your house to bring it down to a lower interest rate. Obviously, interest rates, some of it does, get affected by your credit and all that good stuff. All right. So what does this mean for investors, right? As far as investing goes, I do think it's incredibly important here. Let's go ahead and just pull up, just like the S&P 500, some sort of index here. And you guys can see that really today, nothing crazy happened. And you're probably wondering why. Why is that? Well, it's very, very simple. Honestly, it was expected. When people invest, they invest into the future. And so when it's cut, it's kind of like, okay, that checked the box, right? We did get a little bit of some buying pressure after hours, but this is what does excite me here. Let's go ahead and get this up. Let's go ahead and actually minimize this, and we'll do this. Okay. This is what gets me excited here, is because the Fed signals 2 more cuts this year, lowering rate by 25 basis points. So this would be crazy, right? This would be pretty insane. Let's go ahead and scroll down here a little bit. So the CME Fed watch tool, it was pricing in a 28.1% probability that the target range could be at 2.75 to 3% by December 2026. So the S&P 500, which is the market, was little changed at, so it really didn't rise that much. The Fed funds target range was lowered to a range of 4% to 4.25 at the end of a 2-day meeting in Washington. So this is pretty much what the FOMC said in a statement in support of its goals. And in light of the shift in the balance of risk, the committee decided to lower the target range for the federal funds rate. Obviously, that's all good stuff. So, what I think and why I think we're starting to get this is, one, it was kind of promised and hoped for this year. Two, this will help stimulate the economy more, right? When you have a lower interest rate, what this is going to do is it's going to fuel, one, job growth. People were concerned about job growth because, since March of this year, there was an article that came out and said that we've actually missed the job growth by almost like 900,000 jobs. So, one, this could help fuel jobs. Two, what this is going to do is, if people that are on the fence about getting a house or moving, this will help incentivize home buying, car loans, stuff like that. And it's exciting though. It's exciting for stocks. It's exciting for money. And if you're looking to buy a house and all that good stuff, this could be a good time to pick up to pick up a house. Maybe if you're, locked in on a high rate, in the next couple of months could bring good opportunity to actually refinance your house at a lower rate. So guys, I hope you guys all enjoyed today's video. If you did, smash that like button, subscribe, and we'll see you guys in the next one. Take care.